Welcome to Commercialising Intellectual Property. My name is Brian Auld of Bretherton Solicitors, and I'm joined by my colleagues Philip Towler of Danes, Keith Erry of Insansys Life Care, and Margaret Savoury of James Cooper Creston. Before we actually get into the details of what the speakers will be talking about, can we just have a quick technical tour to make sure there is an audience out there listening to us rather than us just talking to ourselves? You've got a drop-down menu that you can use and minimize if you wish, and also during the course of the talk you can send messages. Congratulations are always gratefully received, but principally any questions that you would like to put to the speakers during the course of the talk, and we'll receive those this end. So could you just give us an electronic wave by just saying that you are there and how many people are listening to our broadcast, and we'll start receiving those while we're talking. And at the end of the broadcast, we'll pick up as many of those questions that come through as we can. There are CPD points available if that's what you need in terms of your own position. And this is being recorded, so you will be able to view it again if you miss part of the recording for any reason, or if indeed you want to circulate it to colleagues. So just contact and we'll provide you with suitable details for that. We are lawyers, so we have a disclaimer. Clearly, this is for broadcast purposes only, the information that's being given. We're not accepting responsibility in terms of this is not an advice session. Clearly, this is generic information that we're giving, and it's largely based on English law, exclusively based on English law. So please do read the small print and take this broadcast in the spirit in which it's offered. Thank you. So what's coming up? Well, Philip will be talking about IP protection. Keith will be looking at what it's like in real life in terms of what IP means to him and his business. Margaret will be looking at the tax and accounting consequences that are associated with intellectual property. And I'll be bringing up the rear talking about IP legal considerations. Philip, over to you.
Thank you, Brian. So, good afternoon, everybody. And in this initial part of the webinar today, I'll be considering why you should protect your IP, what IP you can protect and how you identify it, how you protect trademarks and patents in particular. They're the two most popular registered rights, and with a brief mention of typical costs and timescales that you might encounter in the UK, and then a few words about copyright if there's time, and also some brief discussion about third-party rights. And I hope in doing that I'll set the scene for my colleagues here. So, why protect your IP? Well, IP, of course, in its broadest sense, is a right which marks out, by legal definition, types of conduct which may not be pursued without the consent of the rights holder. Or to put it in another way, IP rights may not entitle you to do anything yourself, because that would depend upon the rights of others, as I'll touch on later. But those rights will enable you, or may enable you, to prevent others from doing something that they might otherwise be free to do. And so IP rights are often called negative rights. So among the advantages of protecting IP would be to give your business a competitive advantage, especially true of patents, which can give a monopoly in a technical innovation, which you could then prevent competitors from using in their products. And I'm sure Keith will have something to say about that later. IP can add value to your business. Patents, trademarks, and registered designs are all items of property to which a monetary value can be ascribed. Also, having a recognized brand or a patent covering technology on the market or in development can attract interest from investors, joint venture partners, and of course even possibly attract skilled employees. Ultimately, could make your business interesting for potential purchasers also. Now, not all companies who make inventions have the wherewithal or possibly the interest in creating their own manufacturer or supply chain, and for such companies, granting licenses under a patent, for example, can produce an income stream. There are also tax benefits, which Margaret will be talking about later. I wouldn't necessarily suggest that you protect your IP just for tax benefits, but it's important to know that they exist and they can be advantageous. So moving on to the types of IP. Well, IP has evolved in different flavors that are intended to protect different types of property. And on the slide there, you'll see some basic details for the main categories, just indicated briefly what the IP is intended to protect, and how long the protection can last. I should say that list is not exhaustive. There are other rights such as plant variety rights, semiconductor topography rights, but they're fairly exotic and not of interest to most companies. So as the slide shows, some types of IP require you to undertake registration procedures, and in theory it's possible to navigate them without professional help, but it's usually very difficult to do so satisfactorily, which is where my profession comes in and how it came into being, why patent attorneys and trademark attorney firms exist. Our reason for existence is to help clients to register their IP rights, or to defend clients against third-party rights, or to give commercially focused advice about those rights. And there are also rights, as you'll see from the slide, which are unregistered. So, for example, they may come into existence automatically. So if you write an original book, by original I mean not copied, or even an essay, your literary copyright comes into being on creation. And there are also some rights in trademarks and other signs that are generated only by use in the marketplace. So such passing off rights exist, but are more difficult to assert against third parties than the registered right due to the evidential burden. So the take-home message really from this slide is, if available, always consider seeking registered rights, and then you'll be helped to reap the full benefit of your IP. So the first step is to identify your IP, and that can be, of course, a question of company culture, creating conditions in which IP can be generated, and then having processes in place to capture it and assess whether it is worthwhile protecting and how best to exploit it. So in relation to capture, some of the things that you might want to consider for your business is, do your employees know about IP? Have they been educated? Is there a written company policy, for example, about how company brands or trademarks are to be used? Is there a company policy about how innovative ideas are to be communicated to line managers, for example? So they might range from something as simple as a suggestion box in small companies to more formal invention disclosure forms and processes that many of my firm's corporate clients adopt. Another thing to bear in mind is ownership of IP mentioned in contracts of employment. I think Brian may touch on that later as well. So whether or not you're considering IP in detail for the first time, you might want to consider an IP audit, which among other things could help you identify what you own, avoid a loss of rights, increase the value of your IP, align IP with your overall company strategy, and of course help to ensure that your IP is fully protected. And they can also identify risks in relation to third-party rights or identify tax-saving opportunities from IP. So those factors are of course also relevant to assessment of your business's IP as well, and budgeting comes into that also, not just budgeting for the costs of protecting IP, but also making perhaps contingency plans for possible issues with third-party rights. So moving on now to a quick summary of the processes for registering trademarks. Trademarks, of course, being indicators of origin, that's the theory, for goods and services. And with that hopefully comes an expectation of quality or value, which can be a driver for brand loyalty. So to be able to indicate origin, the sign has to be distinctive, and usually trademarks are words, logos, or a combination of those, although they can be more exotic things such as color combinations, shapes, jingles, but those are more difficult to protect in practice. So protection is territorial. Every country has its own trademark law and trademark office, and in Europe there's also an EU-wide registration system, and there's also an international system which allows you to file century, which covers 100 countries now. When you register a trademark, you do so in relation to specified goods and services, which are divided into 45 different classes under an internationally agreed classification. And the slide there gives you some typical costs for registering marks in the UK or in the EU, as well as some timelines for the UK and EU registrations. The timelines there are fast by global standards, among the fastest in the world, in fact. There's also an opposition system to allow owners of earlier rights to object if they perceive a conflict, and that usually happens at the publication stage. There's a period in Europe and the UK of 2 or 3 months in which you can oppose if you feel there's a conflict there. So moving on to patents. This is a very simplified slide showing the patent procedure there for the UK. Patents are for inventions, so that could be product or process in any technical field. There are some statutory exceptions, for example, methods of doing business or mathematical methods, and computer programs per se are also excluded from patentability, although I should say that there are workarounds possible for software-related inventions. And the main requirements for obtaining a patent are for industrial applicability, so that's broadly defined, but basically it has to be technically useful in some way. And most importantly, it has to be novel or new. And that's a universal and absolute novelty. That means that your invention must not have been made available to the public anywhere in the world before you file your patent application. And for that reason, it's very important to keep your invention secret until you file an application. Your own disclosure could count against you and possibly invalidate the patent later. And the other requirement is that it must be inventive, so not obvious over everything that's previously been made available to the public. A patent is a legal document, and so it's essential, I would say, to get some professional assistance with that. Patent drafting is a high-level skill, particularly the claims which define the legal monopoly sought, and the patent also has to describe fully at least one way of putting the invention into effect. So there's an initial outlay, usually of around £3,000 to £5,000 for drafting a patent application, but that should be regarded as an investment. And once the initial application has been filed, and there's a priority system which is works throughout the world, which allows you to file anywhere else within 12 months and claim back to your home filing date. That's very important, not only because it allows some deferral of costs, but it also allows time for searching, assessing patentability, perhaps attracting investment, or for product development or testing. I've only really covered the basics there in the UK. There is obviously similar systems overseas. There's also a European Patent Office, which is not an EU institution, and an international system with 152 member countries, the PCT, or Patent Cooperation Treaty. I should say at this point that seeking protection abroad can increase costs significantly. If you cover various other foreign countries, you could easily be looking at tens of thousands of pounds, or if you file very, very broadly throughout the world, even more than that. If you need more information about any of this, please do feel free to email me after this webinar. So just a quick word about copyright, which I know Brian will also cover later on. Unlike patents and trademarks and registered designs, this is not a monopoly right. It does require copying for there to be infringement. And among the types of work listed among the types of work entitled to copyright protection are those listed on the slide, some of all of which your business, I suspect, will generate. Because there are no registration formalities for copyright, it's important to have some supporting documentation in order, especially with regard to ownership. For example, if you employ an external designer to do some designing of artwork for you that you may want to use later, get a written assignment of that copyright. Also concerning the date of creation, there are online facilities for registering or for depositing some copyright works, for example, or your solicitor may accept a document in order to establish such a date. And then, of course, there's always to remember marking, and I've given a copyright notice of my own at the bottom of the slide, mentioning the name and the date. So finally, for this part of the presentation, a short slide about what you might call the other side of the coin. Just remember that others may own IP rights too, and they may conflict with or predate yours. So, for example, an earlier patent may prevent or limit the protection that's available for your own invention, or it might prevent you from commercializing your invention even if you do manage to patent it successfully. So you do need to have an idea of what we call the state of the art before embarking on the patent process, and that really indicates a need for searching at an early stage, something about which your patent attorney will be able to advise and arrange for you too. Similarly, with trademarks, generally it's advisable to commission clearance searches before adopting a trademark, in the market. A trademark attorney can advise you about that, and there are also some searching facilities available freely online. In the earlier slide related to trademarks, I give a link to the UK IPO's searching service. So finally, enforcement of IP is down to the owner. There's no government enforcement. The court system is, in the UK at least, is more flexible than it used to be, and there is now a specialist intellectual property enterprise court known as IPEC. It's part of the High Court system and has specialist IP judges with jurisdiction to handle all kinds of IP disputes. And for the last 5 or so years, it has also offered a small claims track, which allows fast resolution of low-value disputes up to £10,000. It can also handle higher value claims up to £500,000 too. Litigation, sadly, can be costly, so generally it's better to seek a negotiated solution where that's possible, and there are professional mediators who can assist with that. It's also possible to get or to seek insurance to cover the cost of litigation, either as a claimant or perhaps less often as a defendant, and I think Brian will have some comments about that later. So that completes my section of the webinar, and with that I'll hand over.
Okay, thanks, Philip. And just to underline Philip's point that he made early on, it's infinitely preferable to enforce registered rights if they're registrable than unregistered rights. Anyway, coming to the real world, and Keith.
Thank you. I'm Keith Erry, CEO and co-founder of Isansus Life Care. This company was formed in 2010, so not so old, but not so young either. We're a healthcare business, and we are looking at this idea of monitoring patients in new ways, and this digital nature of doing that is critical when we look at IP, because a digital platform, as we'll see, is something which continually evolves. And some forms of IP, such as patenting, don't lend themselves very readily to evolving or evolution in that sense. So the system then is something which captures data from patients, and they can be at home or they can be in the hospital. This is significant because one of the big trends in healthcare today is to treat patients not in a hospital but in a home care setting. And that's for patients who may have been put into hospital not so long ago. And there's a number of big hospitals in the world who are shedding beds. And they're shedding beds because, apart from anything else, hospitals are costly and sometimes dangerous places. The other thing about the technology that we've developed here is that it's wireless. So patients are being monitored almost as if they were in an intensive care ward, but in fact they are wearing smart patches, smart technologies, and this data then is being collected. It's being collected in a back-end system, and so the data that is collected is not only real-time, but it's very rich in the sense that these are big data sets, and we can start to use some of the ideas of machine learning, artificial intelligence, or big data to not only allow patients to be able to roam freely and in any location, but also allow the clinical teams, the doctors and nurses, to be able to use the data to predict what is going to happen to the patients. And we see that in the next slide, where we're looking at what I would call here an ideal patient digitization and analysis platform. So what we're looking at is digitizing a patient. And what do I mean by that? Well, we're creating a digital image that describes the physical state of a patient. And there's been a lot of work around digitization in the sense of digitizing the human genome. There's some other work that springs from the genome. And what we're doing is digitizing the physiognom. And this is important because once you have a digital description of something, you can then start to look at it and analyze it. And as shown here, if you can measure something and you can measure with sufficient accuracy and resolution, you can build a model. And that model then can be used to predict what is going to happen. And if you can predict something happening, you can take an early action and you can intervene and, in fact, prevent that happening. So why is this important? Well, there's some shocking statistics, and if we just look into the UK case alone, 12,000 people last year and this year as well will die of avoidable deaths in NHS hospitals, simply because they were deteriorating and that deterioration wasn't recognized in time. And these kinds of systems and this kind of thing that we are looking at here is a way of being able to allow very highly stressed clinical teams to be able to access the data and be given early warning indications of these kind of deteriorations. So this system then, being something which is running in real time, comprises a number of different parts. And so those parts then, on the patients themselves, we have wearable sensor technologies, smart patches and other kinds of devices. These connect with a radio connection, a wireless connection, to what we call a gateway, which in the case where these are in a hospital is a bedside monitor. But unlike traditional bedside monitors, there's no wires between the monitor and the patient. The bedside monitor then is connected to the back-end server system, and that server then is able to take the data and deliver it to clinical teams regardless of where they may be. And we can see here that we are measuring from the patient and we are modeling and predicting what's going to happen with to that patient at some point in the future. So this is a way of looking not only at the current state of a patient, but also the future state of a patient. And so one of the things that we have here is the first piece of IP that is kind of significant here is that we've called this our patient status engine. And we are in the process of auditing all our IP at the moment, and we will be coming to Philip shortly and looking to register a number of the branding names that we are using as part of this platform. So for instance, we call our body-worn devices Life Touch, which is something which is a cardiac monitor. We call the back-end server, we call it our LifeGuard server. And so we have a number of things in here which are quite interesting as trademarks and trade names. So if we look then where the IP starts to build up in this patient status engine. So we've seen that there's trademarks and there's names associated with the parts of this. And here we can see that there are patents. So we have 2 issued patents on the wearable sensors. So it sounds like a great idea to be able to put wearable sensors on a patient, have them can work by transmitting a wireless signal to somewhere else. And we're familiar with this kind of stuff today. People have Fitbits, they have Apple Watches and all that kind of thing. The difference that we have here is that these devices, in fact, this whole platform is a regulated medical device, end to end. So technically a class 2 device, class 2A, shortly go to a class 2B under the European classification scheme, and a class 2 in the United States. A very interesting story about this whole area is that, yes, it's a great idea to put wearable patches onto a patient. It's an even better idea if they're able to be disposed of, because in a hospital context, that's a good thing to do. And it's good that that data then is collected and sent to a back-end system. However, there's a patent on that. There's a patent, Mr. Lewis patented this whole idea. But fortunately for all of us in this game, that patent was actually issued in 1976, I think. So what the Lewis patent did in the rather quaint language of the patent attorneys, taught just about everything else that's happened in this field. So it's cleared it up. So there is not easy now. You can't patent this whole system idea. That's already been done, and that patent is now expired. So what we are doing there, the patents that we have around our devices relate to two aspects of them. Some of them, the functions of the devices. Another thing is actually quite important because it's a method patent. It covers the recycling of certain components within that system so that we can reuse them again. So the electronic modules in the devices are collected, sterilized, washed, re-sterilized, and we use them again. This has enormous impact on the cost per use and is probably the most valuable of our commercial patents at the present time. But that's not the only thing in the system, because the system then has a lot of software running. So we have software running in the patient gateways, software that we have written to make sure that this all works well, and we have software in our back-end Lifeguard server. We also have a lot of secret sauce, a lot of know-how that is built into this system. So we have wireless networks which are part of the regulated medical device. And that means that we have to take into account the fact that a wireless network will, at some point or another, not carry the data that's being collected there. And so we've developed a whole range of very interesting ways of being able to make sure that we don't lose data within this system. And we are able to make this very, very easy and simple to use. And so that's trade secrets that are locked up in that. And we've also been able to do things that nobody else seems to have been able to do on a system like this. And because, as I said earlier, this is a digital platform, it's constantly evolving. We're learning all the time. So the patents we had were originally filed in 2011. So the company was only 6 or 7 months old when those patents were filed. And it's taken 4 years or so, as Philip told us, for those patents to finally be issued and granted. And that can't be the case where we're moving ahead rapidly and need to be able to protect this system. But the reason we're protecting this system is for all of the reasons that Philip gave. And we're currently in another, as companies, growing companies are, we're currently in a fundraising mode at the present time, and we're looking for a lot of money to scale this business. The IP that's within this platform is of critical interest to anybody who'll invest in this business, because on one level, what we have here seems to be something that already exists in many, many forms. On another level, we know that it doesn't, because we know that this is very difficult to do and it's very, very difficult to scale. And it's within that that we then continually develop the software, and the software then is held under the copyright or various kinds of copyrights that relate to the software itself. Because this is a regulated medical device, all of that is exceptionally well documented. So we have literally hundreds or 2,000 pages, the US filing, our technical history file ran to. So we have a lot of documentation which indicates where and how this IP exists within the system. And on the other side, on the left-hand side, we also have some designs, and we're looking at other kinds of designs where I think we have some design rights, because one of the things that comes out of this is that having all this data, how do we display that data? And so there's a very interesting user design, user experience aspect of being able to present this to the clinicians. So here we have a single product many different instances of IP within it, and we think that the IP within this, as shown here, is the thing that's going to make this very, very valuable, not only as an investment proposition, but as I said earlier, this is already saving lives, and with wider implementation in a hospital system, will continue to do that. And as you see, it's starting to go global. We are effectively still a small UK company based in Oxford, but we already have been able to interest, and not only interest, but get equipment running in a number of countries across Europe, in India, out in Singapore, and importantly now in the United States. So that's what we've been up to, and I'll pass over now to...
Great. Thank you. Thank you ever so much. A real live look at how intellectual property can be the lifeblood of a business. And I think, Keith, you've definitely demonstrated there that is your core asset and the principal product that you have built your business around and will continue to build it around. So I think that's true of many businesses to a greater or lesser degree, and the discussions that we're having is, so how do you best protect that? So, Margaret, let's move on to the accounting and tax considerations that are unique to intellectual property.
Oh, thank you. There are lots of bits of information on my slides, but what I'm planning to do is just give you a few ideas and thoughts and pointers that at some later stage you might come back to if it's of relevance. So, first of all, taking the global perspective, Keith alluded to the fact that Isensys is based in Oxford, and they are gradually moving out to the rest of the world. And initially, I'm thinking from the point of view of maybe if you have a choice, why, from a tax perspective, should one locate in the UK? And the key aim of the current and previous governments is to make the UK an attractive location from a tax perspective. We currently have a tax rate of 19%, a corporation tax rate of 19% in the UK. That is going to reduce to 17% by 2020. Just to give it some comparisons, the EU average rate is currently 21.51%. The USA, before Donald Trump made his announcement, its tax rates currently run at the 35 to 40% rate. They are going to come down to 20%. Australia, France, Germany are all around the 30% mark. So we are at an attractive corporation tax rate, baseline rate for profitable companies. The government has also introduced a suite of reliefs and incentives for innovation. The one that is most well known about probably is the R&D tax relief. That's been going since the year 2000. Patent Box was introduced in 2013 for patented profits derived from patented items. There are also other what are known as creative industry reliefs that have been introduced in the last few years. Video games relief, film relief, animation relief, theatre and orchestra tax relief. So all providing incentives and typically of a cashback nature for companies working in these industries. So having decided that the UK is an attractive place where to cite your IP and create value and hopefully profits therefrom, there are other considerations. One of them is if you then set up a group, you might have more than one company in the UK. Within a group, if you transfer IP between those UK group members, that goes at what is called tax neutral. So it's called nil gain, nil loss. So basically, the cost of that IP just moves to the recipient company within the UK group. If, however, you sell your IP outside the UK group or sell it to a third party, there will be a taxable gain. However, there is a rollover relief. If you reinvest those proceeds within a certain time frame into other qualifying IP, that gain can be deferred. No mention of globalization is complete without talking about transfer pricing. This is a big topic in the global taxation world. The OECD spent the greater part of 2014 through 2016 looking at a 15-point action plan, which was known as BEPS, the Base Erosion and Profit Shifting Project. And in July 2017, they issued revised transfer pricing guidelines. Transfer pricing is talking about transactions between connected companies, so companies within a group, be it within the UK or across borders. And the whole idea of transfer pricing is to reward companies for the value they create appropriately in whichever jurisdiction they are. And the idea is that connected companies should transact on the same basis as if they were in unconnected companies. In July 2017, the OECD reissued the transfer guidelines based on the BEPS project. It runs to over 1,000 pages. I've given you a flavour of a few key chapters. The key initial chapter is talking about the arm's length principle, that one should, for tax purposes, one should trade on an arm's length basis with fellow group companies or adjust for tax purposes. There is a whole chapter now devoted to intangibles, chapter 6, they revised that fully, such as the importance of the consideration of intangibles to transfer pricing and their requirements for documentation. And you have to watch out for penalties if you don't if you don't keep the appropriate documentation. In the UK, we have exemptions for small and medium-sized entities from a lot of the transfer pricing rules. However, that is the UK. As with everything in transfer pricing, there are two sides to a transaction. Lots of countries don't have exemptions based on size. If we drill down now to the UK itself, I've already alluded to a very attractive tax rate in the UK. There is specific tax legislation regarding IP, and it is covered in the Taxes Act of 2009, which is known as the Intangible Fixed Assets Regime. So a specific bit of legislation looking at intangible assets, and IP forms part of that. The good news is it's quite simple, because this states that the starting point is that you follow the accounts as prepared under UK GAAP. And there has been a change in the last couple of years in that we have moved across from old UK GAAP to new UK GAAP. So UK accounts are either prepared under FRS 102 or under IFRS, International Financial Reporting Standards. Under FRS 102, the definition of intangible assets, it's a non-monetary asset without physical substance. And one of the key changes between old UK GAAP and new UK GAAP is that certain costs, such as software and website development costs, are allowed to be capitalized as intangible rather than tangible fixed assets. And this has a couple of tax consequences, one of which is that you will be allowed a deduction for the amortization in your tax accounts. And the other thing is that these costs, because they're categorized as intangible, may be eligible for R&D tax relief. As I've mentioned, amortization or the impairment is allowed. There are new rules on the useful economic life of intangibles for the amortization rate. And generally, the new rules are they have a shorter estimated economic life. Rules under IFRS are broadly the same. Just as an aside, under UK tax law, if you do not impair or amortize the assets in the accounts, there is an election where you can have a fixed rate at 4%. So you can get some tax benefit even if you don't get an accounting deduction. So we've taken a quick look at the global tax position. We've thought about the tax and accounting of our IP. There are just a few things to consider in terms of how you monetize your IP. Typically, that is through the payment or receipt of royalties, and there are some tax considerations. And it's very important to think about tax before you start to make the transactions. Just it's good to take some advice just to check that you're not falling foul of rules or not deducting tax where you should beforehand. First point, especially when you pay royalties across border, is to think about whether you have to pay withholding tax. This is typically suffered where the payment is made. So, for example, if Germany was paying a royalty to a UK entity, the German entity would pay over the UK withholding tax if it were applicable, and the UK would receive the net amount. How much in withholding tax? Well, it depends on each country, and also then to look at double tax treaties and in the EU, the Interest and Royalties Directive. The UK has over 100 double tax treaties, these are unilateral treaties with individual countries, and you look to the treaty to see what happens to royalties in those cases. So you can apply the treaty relief, and that can be reduced down to 0%. Similarly, the EU Interest and Royalties Directive can reduce the withholding tax down to 0%. In the absence of those two, the baseline rate in the UK would be a deduction of 20% withholding tax. Just a point on related parties. If you're paying a royalty to a related party, so a fellow group member, you won't get the deduction for this payment if you don't pay it within 12 months on a paid. It will have to go on a paid basis. Typically, accounts are prepared to an accruals basis, but you won't get the deduction if that's not paid within 12 months. And a few words on VAT. For VAT purposes, royalties are payments of supplies of IP services and are therefore standard rated for VAT. The place of supply is where the customer belongs. So if you're paying royalties to a UK entity, that would be standard rated VAT or receiving royalties. Within the EU, it's a zero rated supply, and the customer has to apply what's called the reverse charge, and the rest of the world is outside the scope of VAT. Normal VAT rules apply. Just finally, to finish off, I just want to mention the two most relevant tax incentives, R&D tax relief and the patent box. R&D tax relief is a success story. It was started about nearly 20 years ago. The latest year for which statistics are available is the 15-16 year, and HMRC received 26,000 claims, of which about 22,000 were from SMEs, and they gave out 2.9 billion of support. R&D tax relief is quite simple in concept. You have to undertake research on qualifying projects, qualifying R&D, and there are specific guidelines detailing what is considered to be qualifying R&D. And then there are heads of qualifying expenditure spent on said projects. So the qualifying expenditure typically is your salary costs, consumable costs if you're in a chemistry lab, reagents, and any amount spent on contractors if you get others to help you doing your R&D. There are two schemes, the SME scheme and the RDEC, R&D expenditure credits. The SME scheme is more generous, and I've given a quick summary over leaf, aimed at SMEs, although it's fewer than 500 employees, so you have to be quite a large SME possibly before you move into the large scheme. It gives you an additional 130% uplift on your taxable expenditure, and this can be surrendered for cash if you are loss making. So for startups, the real benefit is that you can get upfront cash, because the benefit of losses, tax relief for losses, may be several years down the line. The large scheme used to be known as above the line taxable credit. In the last budget, the Chancellor upped the rate to a 12% credit. This is taxable, but it is a cash refund that can be paid back. Again, of use to both large and small companies. The mechanism of making an R&D relief claim is you've got 2 years from your accounting period end in order to make a claim for R&D. Just finally on patent box, so this is a new kid on the block. introduced in 2013. Latest statistics for 2014-15 said that there were 1,100 claims and over 651 million of benefit to claimants. And basically, it's a reduced rate of corporation tax, 10% for profits derived from the patents or sale of items incorporating a patent. There are detailed conditions, one of which is that you have to have a patent or an exclusive license to exploit that patent, and it has to be an EU or UK patent. The calculations can be complex, and there are new rules that have been introduced for IP created after July 2016, which were rules introduced as part of the OECD Base Erosion and Profit Shifting Project, which I've alluded to earlier. I've just given an overall concept slide. I could talk for hours at length about Patent Box, but this just gives you the general idea of what the calculation is trying to achieve. So one has all the profits. The larger box is the profits from the entire company, and you basically strip out any profits from things that you sell that aren't patented. So you identify things that you've sold that are derived, have patents in them, and that starts to go in the box. You then strip out an element for what would be the profit that you would make anyway, where you're just selling that product, but that it had a patent in or not. That is known as the routine return, and the government the legislation sets out the rules for that. You then also eliminate an element of profit for brand. So the argument goes, some profit, if you're well known, like BMW, say, the profit is allocated to the brand rather than the patented item. For startups, probably the brand is of low value. Once you've arrived at that, that is the element of profits that's taxed at 10%. And the new rule that the OECD have introduced is that you then have to link that to the R&D you perform. So there is an additional step that links back to the R&D. The company has to perform the underlying R&D to link to that patent. And then that gives you the tax calculation and the tax reduction. So Patent Box, simple in concept, reduced the rate at 10%. However, there are a few steps to the calculation that has to be undergone. So in summary, the UK is very attractive and open for business from a tax perspective, wanting to attract innovative companies that undertake work there and generate profits. They've got incentives for startups when you're loss-making. And as you go global, like Keith hopes to do one day, just watch transfer pricing and withholding tax on royalties. Thank you.
Great. Thanks, Margaret. And clearly those reliefs, R&D and Patent Box, are substantial by any measure. So if you haven't considered those, clearly that is an aspect that you very definitely do need to look at if you qualify. So I'm just going to pick up some legal points associated with intellectual property, largely the sort of thing that comes up either starting a business or selling it. And I'm going to start by looking at the model, the trading model. Margaret would consider these models looking from a tax aspect, and I simply look at them from a liability aspect. And certainly the traditional holding and trading model is very relevant to intellectual property in as much as it is to real property. So the idea being that you have a holding company that holds the assets, in this case intellectual property, and that asset is then licensed to a trading subsidiary. And it's the trading subsidiary that then takes the trading impact. So if the trading subsidiary fails in any way, shape or form, you're still left with a substantial asset. Very easy model to establish, very easy model to get your head round. You do have to, though, consider the tax and accounting consequences of that as well, and indeed your registration to make sure that you're getting the IP registered in the right company name. In terms of licensing of intellectual property, well, I think the main concepts, and this is what I've called it, salami slicing, at its purest, intellectual property can be and should be a right that you can slice as thinly as you possibly can to ensure that you maximize the return from it. And what I mean by that is when you look at your intellectual property right, you should be very discerning as to what rights you grant others to use it. And the main commercial elements that I've listed there: exclusivity, non-exclusivity, sector, industry, and territory. Those are the key points, and there's lots of intellectual property owners out there that may willy-nilly give away exclusive rights, or indeed grant territories such as Europe or the United States without fully realizing that those are huge territories, and those are huge rights that they do need to think about very, very carefully. And then the sector and industry is a key component. If you have an industrial application that could go across a number of sectors, I've got a client that measures tyre pressures, but those could be tyre pressures from aircraft and motor scooters. So, I mean, that's a huge sector. The application is relevant for all of those. So why on earth would you grant rights across all motorized vehicles to a single seller? Well, you wouldn't. If you were going to do it right, get your salami slice right, then you simply wouldn't do that. Protection and expansion into new territories is obviously a key part of your licensing. Whatever you get in the UK does not naturally translate into what protection you might get in another territory. So the expansion program that Keith is indulging in, clearly one of his considerations is, well, what protections can I get or should I get within the territory that I'm operating in? And restrictions on using IP. It's all very well granting a right to a third party, but you do want to make sure that that right is limited usually to that third party, or indeed to their distribution channel, rather than allowing them a right to simply expand it to whoever they want. That simply dissipates your rights and devalues it. And there may be areas that you actually want to exploit yourself. So it's very important that you retain to yourself rights that you know you can exploit, and you don't need third parties to take those rights on. Equally, when you're granting exclusive or non-exclusive rights, bear in mind you may want to take those rights back. Usually going to cost you if it's an exclusive grant. It shouldn't cost you if it's a non-exclusive grant. So you might well get somebody who creates that market for you in that territory, but you then may want to take that right back so that you can exploit within that territory. And clearly the operator in that territory is warned of that, and so that they would want some form of protection by way of exclusivity. Those are the principal parameters that you would look to when you're considering IP licensing. Copyright is probably the most common form of intellectual property right, and as Philip's explained, there is no registration requirement for it. And then you therefore develop myths about, well, if it's on the internet, it's common property, and I can just dip in and out of it and use it willy-nilly. Clearly that's not the case. You have to have an appreciation that if it's an original work, the test is a very low one, and it's in a permanent form, it probably belongs to somebody, even if they haven't gone to the trouble of sticking a copyright notice on it. And equally, within your business, you're generating copyright material all the time, be it marketing, websites, or indeed bespoke software. So understand what that copyright consists of, protect it in the best way you can, and ensure, as Philip's already mentioned, that if you've got outside contractors doing the work for you, you get written assignments to make sure that ownership properly transfers to you. Employment and employees are another key area in terms of dealing with intellectual property. Make sure that your employment contracts do specify that what is created by an individual during the course of their employment belongs to the company. You can get loads of different arguments in terms of what people have done in their garage shed when they're not working for you, and claiming that that was all their own invention and all their own work. So you want to avoid all of that and make sure you have proper intellectual property provisions. And equally, most of the work I do is buying and selling businesses. This is not an academic exercise. When you come to sell a business that is strong on intellectual property, the authenticity, the authorship, the ownership of that IP is absolutely key. So going back to registration versus non-registration, waving a trademark certificate at somebody and saying I own it is a damn sight better evidence than saying, yeah, I've used this mark for a number of years and I reckon everybody recognizes it's mine. That's not a big sale item, and certainly you wouldn't get a premium for that sort of an argument. There are more obscure rules that may affect some employers in terms of employee patent compensation rights. Philip, I still think the situation is they're very rarely invoked successfully because they're fairly tortuous and difficult to establish. But equally, if you're an employer and you've got individuals that are working in that area, do not assume that everything is yours and nobody might come and challenge that. So just be be aware of that as a fairly obscure element, rarely exploited, but it is a right that somebody might want to assert. Philip's already given you the health warning that litigation is costly and time-consuming, and that's largely because the most effective element of litigation is an injunction, which means you want to do everything in a hurry because you want to stop the infringer using your rights, and therefore, by definition, it's an accelerated litigation process. Is the only way of properly establishing a claim and trying to do something about it. There is insurance available. There's 2 providers that are on there. It's like every other insurance. Does it cost you? Absolutely. Is it expensive? Probably. But like every other insurance, it's there for a reason. If you haven't the wherewithal to enforce your rights, you will not be able to enforce them. And yes, do people get ripped off all the time? So everybody knows that. So what do you want to do about it? Do you want to invest in some form of protection as well as the registration? That's been a bit of a gallop, I appreciate, but I also appreciate you guys that have got lunches or other more important things to do. We are going to round off with one question round the table because we've got a couple of minutes, and that is the sort of elephant in the room, certainly for most of the discussions I've had over the last 6 months or so. So what about Brexit and all this lot? Philip, can we start with you?
Yes, I'll canter through it as quickly as I can because it's potentially quite a complicated question to answer. And it does affect different types of IP in different ways, and there are still significant uncertainties about what will happen upon Brexit. Obviously, at the moment, we're still in the EU, so nothing has changed. And in relation to patents, I can say definitely there won't be any effect on the process for filing and examining patents in Europe. The UK IPO will continue as now, and so will the EPO, which is not an EU institution, the EPO being the European Patent Office, based principally in Munich. Depending on what's negotiated, Brexit may affect the UK's ability to participate in a new scheme called the Unitary Patent, which is a single patent that can be registered for the whole EU, or at least for all participating EU member states, and also the Unified Patent Court, which is a single court deciding on the infringement and validity of patents in all participating EU states. The EU has been heavily involved in preparation for bringing this system into being. It isn't yet in being. One of the 3 branches of the central division of the court, in fact, was or is to be based in London. There's still some ratifications needed, including the UK, which has indicated it will ratify, and Germany, where ratification is being held up by a constitutional court challenge. So basically, it remains to be seen whether the UK will actually be part of the system. Currently, it's only open to EU members, so there will need to be some change to the wording of the agreement in order to allow the UK to participate. For trademarks and registered designs, it's a slightly different situation because there is a EU-wide system for both of those, for registering both of those rights. So in principle, when the UK leaves the EU, EU trademarks and registered community designs will no longer cover the EU, but in practice it's inconceivable, I think, that the UK government won't introduce provisions to allow existing EU trademarks and registered community designs to continue in the UK after Brexit. The mechanism is yet to be decided. Professional bodies are lobbying for this to be automatic protection transferred over with no cost burden for owners, but we'll have to wait and see what will happen. There are also other legal issues to be decided, which I haven't really got time to go into now. I think the take-home message is that there's no immediate action needed for owners, but keep in touch with your advisors, your external advisors. And one other point, do check existing agreements that you might have that mention the EU. You might need to produce some addendum or side letter for the parties to sign to clarify their intentions.
Great. Margaret, you've got 30 seconds to describe Brexit tax and accounting.
I think the key issue will be on VAT. That will be the biggest change. From a transfer pricing perspective, that's OECD, which is a wider body in the EU, so the patent box changes introduced by the OECD will probably remain. The only one that might get changed is the SME scheme for R&D relief. That is considered EU state aid, so there's a cap on how generous HMRC could be. So arguably, potentially, who knows, if they are out of the EU, the R&D relief might increase.
I'm right in thinking, aren't I, that the VAT is not just theoretical. People should be looking at VAT planning and speculating as to what might happen and preparing for it.
That is the big change. We talk to your VAT advisors. I would not claim to be a VAT expert.
Okay.
But talk to people that know.
Keith, what's happening on the ground?
Well, there's in the medical device space, it also could be problematic. It's not necessarily the case that the UK would follow the medical device directives or the medical device regulation now after Brexit, although they'd be wise to do so, but there will need to be new legislation. If we come out of is a hard Brexit, then we will have to export goods from the UK into the EU, and then we will have to have a registered importer and a fully regulated body or entity in the EU to take the goods, and that's just another dimension outside of the tax and the IP issues, which would go with that. We already have set up a company in Germany as a hedge against that, and I think we'll just have to sit and wait and see on that one.
Okay. I think Philip's already outlined, the legal structure, and I think the legislation across the piece, not just with respect to IP. There's got to be some transitional arrangements. I mean, as is going through the House of Commons now in terms of maintaining the status quo for a period, because simply you cannot stop and then start again. And after that, there'll then be forum shopping, as there is for tax, there is for litigation. I mean, that's always been the case. London has always, and English law has always attracted a level of forum shopping because of that. Whether that will continue if we remove ourselves from Brexit is a matter for speculation, and we haven't got long enough to go into any of that. So that's it, guys. Thank you ever so much for my speakers, Philip, Keith and Margaret. Do please give us some feedback on the feedback survey. That would be great. We haven't got round to answering some of the questions, but we will reply to those that have come through. And this is recorded, so please do ask us if you'd like the recording. And thank you ever so much for your attention. Good afternoon.